Hey everyone, thanks for joining us today for another deep dive.
You bet.
As always, we want to help you get to the bottom of what's really moving the markets. Cut through all that noise
Kelly.
and get straight to the stuff that really matters.
Yeah.
Today, we're diving into a really interesting article that caught my eye from The Motley Fool. It was published just yesterday, April 4th, 2025, and it's all about a potential buying opportunity
Okay.
with two of the Magnificent Seven,
Right.
Microsoft and Amazon.
Love it.
And specifically, the article suggests that these recent dips might actually be a really good entry point, particularly when you consider their strong position in AI.
Right. Yeah. These are two of the big ones, right? They're not just any companies. These are the companies that really set the tone for the entire market. And the article points out that both of them have had, pretty noticeable pullbacks.
Yeah.
Microsoft is down almost 20% from its peak, and Amazon has taken an even bigger hit,
Yeah.
almost 26%.
Yeah, pretty substantial.
Yeah. So what we really want to unpack today is the Motley Fool, right? Are these dips really a signal that now is the time to buy, especially given everything that's happening in the AI space?
Right. And I think it's important to for anyone who's maybe newer to investing or hasn't heard this term before to just quickly define what we mean by the Magnificent Seven.
Yeah, absolutely.
As the article reminds us, these are a group of seven really dominant tech companies that have really been driving the market's performance.
For sure.
And they list them out with their market caps at the time of writing. So we've got Apple leading the pack at $3.05 trillion.
Wow.
Then we've got Microsoft at $2.9 trillion.
Okay.
Nvidia at $2.5 trillion. Amazon at $1.9, $1 trillion. Alphabet at $1.8. $4 trillion Meta Platforms at $1.3, $7 trillion. And then Tesla bringing up the rear at $860 billion.
Yeah, you start to add those numbers up and you realize just how much influence these seven companies have on the market.
Oh, absolutely. I mean,
Yeah.
that's a huge concentration of value, and they really do influence sentiment.
Yeah, and it's important to remember that, these dips that we're talking about with Microsoft and Amazon, they're happening within the context of a broader market pullback.
Right.
The S&P 500 as a whole is down almost 12% from its recent highs.
Right.
But it's also worth noting that the market had two really, really strong years in 2023 and 2024 with gains of over 25% each year. So,
Yeah.
some degree of pullback isn't entirely unexpected. It's almost like a natural kind of ebb and flow.
Right. Right. So it kind of makes sense when you put it that way.
Yeah, and that's kind of the point that the Motley Fool is making.
Yeah.
Maybe this pullback is actually a good thing.
Yeah.
Maybe it's an opportunity to buy into these incredible companies at a bit of a discount.
All right. Well, let's start unpacking this with Microsoft.
Sounds good.
This is a company with a very long history, going all the way back to 1975.
Yeah, they've been around forever.
And I mean, it's hard to imagine the world without their software.
It really is.
I mean, the article points out that over 1 billion people worldwide use their Windows operating system and their word processing software.
It's incredible the reach that they have.
Yeah, I mean, that's got to be like, what, 1 out of every 8 people on the planet or something like that.
Something like that. Yeah, it's mind-boggling. And that's what I think makes them so interesting right now, is they have this incredible foundation, this massive, loyal user base, and they're using that foundation to really push into AI.
Right.
The article talks about how they've invested something like $14 billion in OpenAI since 2019.
Yeah, that's the company behind ChatGPT, right?
Exactly. And that kind of investment, you don't do that unless you really believe that AI is going to be transformative.
Yeah, that's a huge statement.
For sure.
Well, and they haven't just been, throwing money at it. They've been using that technology to develop their own AI assistant Copilot, which they're integrating across their entire ecosystem.
You see it everywhere.
Yeah, I mean, it's in Windows, it's in their Edge browser, it's in Bing. But what I think is really interesting is that they've also launched it as a paid add-on for their Microsoft 365 suite.
Oh, yeah, that's huge.
Which includes, Word, PowerPoint, Excel, all those essential productivity tools that people use every day.
Right. I mean, think about the potential market. We're talking about 400 million existing Microsoft 365 licenses that the article mentions.
Yeah.
I mean, even if a small percentage of those convert to paid Copilot subscriptions, that's a huge recurring revenue stream for Microsoft.
Right. And the early adoption numbers that they share in the article are pretty impressive.
Yeah, what do they say?
Organizations that adopted Copilot for 365 saw their license usage increase tenfold within the first 18 months.
Wow.
And then employee usage surged by another 60% in the following quarter.
So it's not just that companies are buying it, it's that people are actually using it.
Yeah, exactly. And using it a lot more over time.
That's a really good sign. I mean, it suggests that Copilot is actually providing real value, that it's not just a gimmick.
Right. It seems like it's actually becoming a core part of how people work.
Yeah, and all of that is happening while Microsoft is also, building the infrastructure that powers AI applications through their Azure cloud platform.
Right. Azure.
The article mentions that their Azure AI services saw a 157% year-over-year revenue growth in the second quarter of fiscal year 2025.
That's a massive jump.
It's incredible. And, it's not just a small part of Azure's business either.
Okay.
Azure AI actually accounted for a record 13 percentage points of Azure's total 31% revenue growth in that same quarter.
Yeah.
So basically, AI is becoming a major growth driver for them.
So they're not just, putting AI into their software. They're also providing the foundation for other companies to build their own AI applications.
Exactly. And they're offering pre-trained large language models, including ones from OpenAI, that companies can then customize for their specific needs.
So they're making it easier and faster for companies to get started with AI.
Yeah, they're trying to be a one-stop shop for all things AI.
Okay, so we've got this, established software giant making huge strides in AI. Their AI products are seeing strong adoption.
Right.
And according to the article, their stock is trading at a pretty attractive valuation.
Okay, what's the PE?
Right now, it's at 30.2, which is the lowest it's been since mid-2023, and it's almost 9% below its 10-year average.
That's significant, and that's kind of the point that the Motley Fool was driving at. Maybe this is a case where investors will look back and say, I wish I'd bought Microsoft when it was at 30.2.
Yeah, I mean, when you consider their growth in AI, it does seem like there's a potential disconnect there.
Right. There's this feeling that maybe the market isn't fully appreciating the long-term potential of Microsoft's AI business.
Okay, well, let's switch gears and talk about Amazon.
Sounds good.
I mean, everyone knows them as the world's largest e-commerce company.
Yeah, but there's so much more than that.
But, right, and the article highlights that, their cloud computing business, Amazon Web Services, or AWS, is actually even bigger than Microsoft Azure.
Wow, I didn't realize that.
Yeah, it's huge. And they're not just content with being the biggest. They want to be the leader in AI as well.
Okay, so how are they approaching that?
Well, the article talks about how they're trying to be a leader across all three layers of the AI landscape: the infrastructure, the large language models themselves, and then the software applications that use them.
Okay, so it's a very comprehensive approach.
Yeah, they're not leaving anything to chance.
So what are they doing specifically in each of those layers?
Well, on the infrastructure side, they're investing heavily in developing their own data center chips.
Interesting.
They've got Trainium, which is designed for training AI models, and then they've got Inferentia, which is designed for deploying those trained models.
Okay, so they're controlling the whole process from training to deployment.
Exactly. And the article says that using their own chips could save them up to 40% compared to using NVIDIA's chips.
Wow, that's a big deal. I mean, that kind of cost saving could really give them a competitive edge.
Yeah, and it shows how serious they are about AI. Then in the middle layer, with the large language models, they've got AWS Bedrock, which gives customers access to over 100 pre-trained LLMs.
Okay, so they're not just building their own models, they're also providing access to third-party models.
Right, and that includes models from companies like Anthropic, as well as Amazon's own Nova family of models.
And I'm guessing they're positioning those models as being more cost-effective than the competition?
Exactly. The article says that they could be up to 75% cheaper than many competitors.
So they're really hitting that value proposition hard.
Yeah, and I think the combination of their own chips and their lower-cost LLMs could make AWS a really attractive platform for developers.
Yeah, it's like a 1-2 punch. You get the performance and you get the affordability.
Right, and that could really help them solidify their lead in both cloud computing and AI.
That's a smart strategy.
And then finally, on the software side, they've introduced Q, which is an AI-powered virtual assistant that's built into AWS.
Okay, what can it do?
It can do a lot. Apparently, it can analyze data, identify trends, even assist with coding tasks, all using natural language commands.
That's impressive.
Yeah, and the article stresses that it's designed for both technical and non-technical users.
That's key. I mean, if they can make AI accessible to everyone within an organization, that could really boost productivity.
Exactly, and it could open up a whole new world of possibilities for businesses.
It's like they're trying to democratize AI.
Yeah, I think that's a good way to put it.
Okay, so we've talked about their approach to AI, but what about the financial side of things?
Well, it's pretty remarkable when you look at how much AWS contributes to Amazon's overall business.
What are the numbers?
So in 2024, AWS brought in about $107 billion in revenue, which is a substantial portion of their total revenue of almost $638 billion.
Okay, so it's a big piece of the pie, but how profitable is it?
That's the really impressive part. AWS actually generated 58% of Amazon's total operating income.
Wow. So even though it's not their biggest revenue generator, it's their biggest profit driver.
Yeah, and that's why Wall Street pays so much attention to AWS.
Makes sense.
And when you factor in their impressive earnings growth, they had 90% growth in earnings per share in 2024.
That's incredible.
And you combine that with the recent decline in their stock price, you end up with a PE ratio of around 32, which the article says is the cheapest it's been since 2009.
So again, we have this disconnect between the fundamentals and the market valuation.
Right. And the Motley Fool actually goes so far as to say that this could be the best buying opportunity for Amazon stock in over a decade.
They're really bullish on Amazon.
Yeah, they believe that AWS has the potential to dominate the AI landscape and that this current dip is a gift for investors.
It's a bold statement, but I can see where they're coming from.
Yeah, I mean, they're betting big on the convergence of cloud computing and AI, and Amazon is definitely at the forefront of both of those trends.
All right, so to recap our deep dive into this Motley Fool article, we've got two of the Magnificent Seven,
Right.
Microsoft and Amazon.
Right.
Both of them have experienced pretty significant stock price declines.
Yeah.
And both are trading at PE ratios that are historically low.
Right.
And the Motley Fool's argument is that this presents a compelling opportunity for long-term investors, especially given their strong positioning in the rapidly growing field of AI.
Exactly. And I think the takeaway for me is that, these companies aren't just sitting back and watching the AI revolution happen.
Right.
They're actively shaping it.
They are.
Through their investments in research and development, the new technologies they're deploying, and their massive reach.
Absolutely. And I think that's what makes it so interesting for investors.
Yeah. I mean, it really does make you think, will we look back 5 years from now and say, wow, I wish I had bought those stocks when they were at those prices?
It's certainly possible.
Yeah. And it really highlights the importance of, doing your own research, staying informed.
Always.
And really thinking critically about these opportunities. Now, here's something else to think about. As AI continues to advance at this incredible pace, and as it becomes even more deeply integrated into every part of our lives, how will that impact the growth and valuations of companies like Microsoft and Amazon?
That's a great question.
I mean, they're already deeply involved in AI, and they're only going to become more so in the future.
Right. And it's not just about the technology itself. It's about how that technology is going to change the way we work,
Right.
the way we live, the way we interact with the world.
Yeah, it's a really exciting time to be following this space.
It is. And I think it's going to be fascinating to see how things play out.
Well, I hope you've enjoyed this deep dive with us today.
Me too.
Make sure to check out the original article from the Motley Fool and let us know what you think.
Yeah, we'd love to hear your thoughts.
Thanks for listening. See ya.